What's up everyone, it's Karthik with MoneyVest. Welcome on board for our market open live stream on this Tuesday morning. It is going to be a short trading week as yesterday the markets were closed and we are now officially open with some red as the Nasdaq 100 is down almost 2% pre-market. We've got the S&P 500 also down about 1.5% here as Nvidia, Tesla, a lot of individual stocks are down anywhere from 2 to 5%. So there is a lot of pre-market selling pressure as iron is down a little bit over 6% right now. We've got BMNR down over 7% and then a ton of red with Amazon, Palantir, Google, SoFi down anywhere from 2 to 3% right now. Robinhood is down over 4%. Then we got Broadcom down over 2.6. Tesla's down about 2.5% as well. Meta's down about 2%. So here we are with this Trump tariffs 2.0, as you like to call it, as we are seeing a lot of volatility come back into the market as the VIX spiking over 8%. And so we are getting back to over 20 for volatility. This is the time, this is quite literally the time for us to shine as volatility is spiking again. MoneyVest Index is most likely going to open at lower levels once the market opens here. And yeah, so this is it. If my audio and video is good, just give me a thumbs up. Just want to make sure that everything is good and feeling super good. Mike, thanks so much for asking. Energized over after a long weekend. I love sending that meme. I've always sent that meme of just being bored over the weekend, but I did catch up on a lot of reading, did catch up on some workout, then of course went to the beach. Great weather here in Dubai. Like the last couple days have been absolutely phenomenal, like 70 degrees, 72 degrees, and it's nice and windy, and you go to the beach, you can get some nice sun, and it is absolutely incredible. So yeah, feeling great, and I'm gonna have to cut the live stream a little bit early before market open because I have to be somewhere later today, and we'll share the update on the Discord if everything goes well. Fingers crossed, we'll share the update on Discord. But yeah, I'm gonna cut the live stream maybe 5-10 minutes before market opens because I have to be somewhere, like I said, for something important. So. Okay, good morning, good morning. Could be a crazy day. I love the tariff announcements. Yes, because that creates a lot of opportunity, lots of buying opportunities for us. And as a result, volatility is moving back over 20.5, as I mentioned earlier, up almost 9% as individual stocks, including the indices. QQQs are down almost 2% right now. We got the S&P 500 down about 1.5%, and a lot of individual stocks are down anywhere from 2 to 5%. Some of our favorite ones, Magnificent Seven, Big Tech, everything is selling off right now. So if you take a look at sectors specifically, and if you just kind of run through all the sectors right now, just to get a very, very good idea on where these sectors are trading pre-market. So we got XLK, technology is down 2%. QQQs, of course, part of Nasdaq 100. Discretionary down over 1.7, which includes your Amazons and your other Tesla is also part of discretionary. We got S&P 500 down 1.5. We got XLF, so financial is down 1.4. Industrial is down 1.3. The bond market's down 1.3 as well. We got communication services down over 1%. Materials are down almost 90 basis points. Real estate down over 66 basis points. Healthcare down almost 1%. Utilities and staples, everything is down except for energy. Energy is the only sector among the 11 sectors in the S&P 500 that is actually moving up pre-market, and that's barely up over 20 basis points, thanks to one and only commodity, which is breaking records every single day. Does anyone want to take a guess on what this commodity is? As we already know, it should not be a surprise. I think most people should be able to answer that question. But what is it that we're going to be talking about? What is it that is just exploding once again this year? In 2026, it is taken a whole new level, a whole new shape, and it's approaching the famous, the most important triple-digit level. And that, of course, is none other than silver. Silver has gone up to over 95, almost $96 per ounce. Absolutely crazy. Absolutely crazy. And I really, really wish I bought more. I really wish I bought more. I bought at the beginning of last year. So in the beginning of 2025 is when I picked up silver. That was literally back in, I believe I picked up in February or March. So my cost basis, and you know what? do you want me to show you guys? Like, would it be too crazy to actually show you guys? But this, in the last 1 year, has actually been the best money I've ever spent. It's been the best money I've ever spent. It is up from those levels from back in early last year. That bar of silver is up 227%. Absolutely insane. And I wish I bought more. This has just been a crazy run up for silver. I mean, just look at that parabolic run up since January and February. And you know, I told my family in the WhatsApp group as well to pick up silver at the time. I told them, just see if you can buy some more silver. I still remember calling my parents and I was like, look, you know what? I'm just going to be buying some silver today. And I did not expect that I'd be looking at this chart about a year later with 234% gains. Like, that is insane. And if you take a look at gold as well, it is also, hitting new fresh all-time highs, $4,700 per ounce. And the gold to silver ratio is, getting narrower, right? So gold to silver has come down. Take a look at this, right? Substantial narrowing in on this gap. Gold used to be about 126 times worth silver. So an ounce of silver was 126 times gold. And that number, look at that drop, right? Since May of last year, silver really started to outperform gold. And as a result, this number is dropped over 52%. So silver has gone up twice as fast as gold. Both have gone up, both have done really well, but silver has done twice as good as gold. And as a result, this ratio has been cut in half, which is a very, very big deal in the commodities space, in the overall materials industry. And as a result, this number continues to perform really well. And we kind of experienced a very similar trend back in 2011, and then we experienced about 10 years of gold's outperformance. So gold also took off, during that lost decade of 2010 all the way till 2020, against silver prices. But then since then we have seen just this huge reversion back to under $50 right now. So absolutely incredible. Commendable for silver, and silver and gold to the rescue for many portfolios, I'm sure. And we'll see how long this rally continues for, or if this is a start of a bigger bull run for both of these commodities. I think $100 per ounce is certainly on the cards, in the next few weeks or few months, I would say, as there continues to be a lot of geopolitical tensions, a lot of trade tensions, a lot of uncertainty related to Greenland, Iran, EU, US. There's just so much going on. And we're only 20 days into the year. We were having this discussion in the Discord as well. Like, this has only been 20 days in 2026, and we've already seen so much. We've already experienced and went through so much that it feels like we're already half year in. But it's only been 20 days in 2026. But yeah, so earnings calendar got a little bit of a revamp. So just want to show you guys this earnings calendar. If you come here, we are going through a big shift in the overall UI. This is what the earnings calendar is going to look like moving forward. And you can hover over it and it's going to show you everything you need to know. Netflix is indeed going to be reporting their numbers, 55 cents in earnings per share. Revenue, I've got to let my developer know that we need to fix the revenue estimate as well. But Netflix is indeed reporting. It is pre-market pushing higher, which is very unlike Netflix, as the entire market is pulling back. Netflix is pushing higher. But then we do have revenue estimates at just shy of $12 billion, which, to be honest, Netflix has been struggling for a while under the, uncertainty over the deal with Warner Brother, and as well as the overall chart, the technicals. After the stock split, the stock really did take a nosedive further, another 18-20%. But really for me, $82, $83 is going to be that like support level. That buy target is really going to be sitting around $82. So that is the support level to watch for Netflix. I mean, that's a level where I could see myself selling puts, accumulating, buying more shares, dollar cost averaging in and around those levels, I think would be great. All right, so let's do some Q&A for the next half an hour. So any questions, stock related, investing, trading, options, finance, anything you want to talk about, anything you want to ask, let's tackle those questions together. And is IREN the new SMCI? IREN $50? Yes, IREN is pulling back pre-market. So as I mentioned over the weekend in my video, I do think IREN's got a much stronger support at $49 to $50. So that is indeed a support. But if you were asking me about a dollar cost averaging level, a level where the fair value is, if you want to be a lot more conservative, I think $40 is going to be great value for IREN for what the company has long-term potential-wise. So 49 is going to be a good support, but $40 is going to be a much stronger fair value, intrinsic value after already pricing in for a 10% margin of safety, as well as looking at lower growth rates and lower multiples for the stock. So this would be a level where, I could see myself adding more shares. I do have about a couple hundred shares in the options portfolio, but the plan is to add more shares at under $40 for IREN. SoFi has been pulling back a little bit as well. So now down to $25 again, over 3% lower pre-market, a lot of consolidation sideways in that range. Volume has really come off for SoFi. So you can see the volume's been tapering off. I mean, the last few weeks here, it's been trading at under 40 million shares per day, which is significantly less than where the average volume has been. At one point, average volume was well over 60, 70 million shares, and that number has come down, and as a result, it's just been moving sideways slowly and steadily. But it's still pretty range bound. We got a big resistance at $30 and a lot of support here at $24, $25, and I think there might be a lot of buyers getting ready to step in around that $25 to $24 for SoFi. So Microsoft at $450, do you think it's a good time to start a new position? So Microsoft, we have a fair value, I think closer to 400, but even at 445, that's a good support level here. Double resistance, it's coming down to that level, pre-market down almost 2%. And from all-time highs, Microsoft is down almost 20%, so in a bear market. So yes, long answer short, I think it's a good area to start something. But the better deals might be closer to $400. So if I come back over to my shopping list, which by the way, after this earnings season, we're going to update this list. The fair value is at $402. Actually, that's the light buy. Fair value is at $355. So light buy is about $402. And so I want to clarify something with this shopping list as well. I get this question all the time. And sometimes when I do pick up, let's say SoFi or Palantir or some other stock that I'm buying, it may not be at my light buy or heavy buy, right? Why would I be buying something if it's not at my light buy or heavy buy? So I really want you to always remember that our goal with the shopping list is to make sure that my cost basis is as close to these values as possible, right? So it is different than simply suggesting that if the price is at these levels, then we are going to be buying, right? Those are two very different things. And maybe I can reword this moving forward as well to really avoid confusion. But the end goal, at the end of the day, like if I'm looking at a stock for long-term investing and I want to acquire it, I want to accumulate more shares, there are two things that really matter. Number one is what's my target allocation? So how much of my portfolio I want to invest in that stock, whether it's 5%, 7%, 10%, whatever. And that number is never going to be in dollar terms. It's going to be in percentage terms because that's what we can standardize across everybody. If you tell me I want to invest $5,000 in SoFi, I don't know what $5,000 is out of how much, right? It could be $1 million, it could be $5,000, that's all you have, or 50. So we always do it in percentage terms, right? So number one thing is target allocation, how much you want to allocate into that stock. And the second thing is you want to make sure that your cost basis is as close to your fair value as possible. That's the end goal. So if my cost basis is already below these numbers, I can always dollar cost average up on a very strong winner to increase my cash exposure at these light buys and heavy buys, or even perhaps at higher levels, as long as I'm not moving my cost basis too much. As long as it's closer to my fair value, that's really what I target. So very simple example I'll give you. I've got SoFi on here. as one of my shopping list stocks. $17 is the light buy, $13 is the fair value. My cost basis right now for the shares that I have is sitting at around $17. So I'm not going to be buying too much, but I have to make sure that whatever I do pick up for SoFi does not dent my cost basis a lot, right? It's going to still keep it at close to my light buys or my fair values. So that is what the idea behind this is. It's just a very small, subtle difference that I wanted to clarify because I do get a lot of questions all the time. And so that's why even if these prices don't get hit, right, there's still opportunities. There's still, after a 15-20% correction, we can still consider dollar cost averaging in them as long as we already have a position with a lower basis and we can take advantage of those opportunities. If these prices get hit, that's even better, but that should not restrict us from not taking advantage of those opportunities, because I've said this many times over, the risk of waiting is often greater than risk of buying. If you are getting a very good risk reward and a good discount, let's take Microsoft, for example, it's down 20% from all-time highs. Waiting for $400 might create a big opportunity cost, because Microsoft could rally right back up from 450. It bounces back up to 500. And so that would be a missed opportunity. So the risk of buying is worth it at these levels, right? So the risk of waiting often greater than risk of buying at the right circumstances. Not always, but when the risk reward is getting better. Okay, smart money buying Netflix before the earnings. Also, the takeover seemed sealed and done with cash. Let's take a look at the L3 Banker Oscillator. So yes, we do have some indications there is big money stepping in with the L3 Banker Oscillator suggesting for some very good prints coming in. I mean, we saw that with Iron very well over the weekend video. You can see precisely where they entered right around here on December 19. There was a lot of buyers stepping in, a big candle coming in, and since then Iron has just been pushing higher. It's up 40 to 50%. That was right there. Let me see. That was on Friday the 19th. So Friday the 19th, the price was around here, around $40, and it is up about 40% since those levels. So yes, Netflix is seeing some big money orders coming up at the moment. So we'll see how it trades after the earnings. Okay, there's been some buzz around CLSK, so I think that's going to be another crypto stock, if I'm not mistaken. So CleanSpark. It's going to be another data center management crypto miner. Trades very, very close to, I think, Bitcoin and Ethereum, down almost 6%. Lots of consolidation sideways, a huge resistance here at close to 15.29, and we've got a very strong support down here all the way to $9 to $10 a share. So another 10-20% drop here, and it'd be trading at a very strong area of support, a level that it's validated like not once, not twice, but 3 times in the past. So it could be a potential swing trade, not so much of a long-term position just yet. Okay. I have 3 CSPs which expire on 13th February. Could get assigned there. Which stock are we talking about, Rick? If you want to share. Should I buy Micron today? So Micron and what's the other stock? I forgot. Micron has been running. It is extremely overbought on a technical basis at over 84. So personally, I think it's extremely overbought. The RSI is through the roof. The price has, gone crazy in the last 10 months, almost 500%. So 6x growth here. Does it have more potential? Sure. But how much of that future is already priced in? That's what we have to evaluate. But technically, it is certainly not a buy right now because of the crazy overbought conditions for the technical chart. So any kind of pullback or dips that you might see, so if you were to kind of simply just look at this higher low and pull up some moving averages as well. So if we go back to the daily chart, you'll notice that it's validated, that 100 simple moving average. So that's the white line. That's also the quote unquote dip buying opportunity. If we see that, then I think it'll be a good area to dollar cost average into. But until then, I think it's extremely overbought right now. So even in the past, you'll notice, it dropped a little bit, came down to those moving averages. That was a good dip buying opportunity there. This also a couple times. So once over here, another time over here, dip buying opportunity pushed up. And right now it's really moved away from those moving averages again. So it is, in my opinion, technically very overbought and overextended at the moment. But yes, fundamentally continues to be a very, very strong company long term, as it is forecasting earnings growth of 2027 at $42. Like, just imagine, from $8 to $42. That is a massive growth in earnings, almost like 5 times or more than 5 times. And so that's why the stock is really just kind of forward, like pulling forward all those earnings growth into the current market price, and how much of that is going to continue. And one of the things that I've also noticed is that a lot of these companies, including if you take a look at Iron, there's not a lot of forecast, first of all. Like, we don't have a lot of visibility of what's going to happen post 2028. But if you come here to the expectations, the number one thing is that there's a lack of forecast. The second thing is that after 2028, look at the revenue drop, cuts 50%. Same thing with Micron as well. So I think that's really what investors need to be very careful about, because a lot of these companies are pulling forward 2027, 2028 earnings expectations into today's market prices. But what happens beyond that is anybody's guess. And even earnings expectations, revenue expectations, they drop dramatically for a lot of these companies. And so that's what we have to be careful about, because with any growth stock, there is always going to be that one repricing risk that will always be the biggest dark cloud over any growth stock, because at some point growth is no longer growing and the numbers stabilize and the law of large numbers starts to pull back. We're seeing some more modest growth, not the super high 50, 60, 70% growth anymore. And as a result, the stock starts to reprice itself. And that's where you don't want to overstay your welcome if it's a trade. If it's an investment, then sure, you could consider to kind of weather through that if there is more visibility and there's more growth ahead. But you certainly don't want to overstay your welcome, because that's when the stock absolutely gets crushed on multiple compression. A lot of these companies, prices go up on multiple expansion more than they go up on growth. And so the opposite effect is also just as equally bad as it is good on the way up. So multiple compression, probably one of the biggest risks for any kind of growth stock in the market. Okay, Micron still has a low PE, yes, because of those earnings expectations long term, right? Because of the massive growth that we're expected to see. But the moment that growth starts to taper off, that's when the earnings expectations start to come down, and that's when the PE multiple is the most vulnerable for that compression. So that's what we have to be mindful of any growth stock that's trading at those levels. Okay, so I'm going to cover, let's see, Beam, Meta, a good buy now. So Meta I've already discussed. I did a full video stock analysis on Meta as well. My covered calls are going to print this week as well. My Discord hates me, absolutely, because I know a lot of people are long Meta. They want Meta to go up, but another $400 in the pocket in the last week here, and I'm going to be selling new calls for Meta, most likely around the 620, 615 covered call strike. I keep lowering my call strike because of how low Meta is trading now. Gone are the days for 650 and 660 right now because of how much it's dropped. So support level 580 to 590. And I mentioned in my previous video on Meta video as well, I do expect Meta to see sub 600. So do not be surprised if Meta is trading with a 5 handle, trading below $600 coming down to that support. So I do think there's better deals coming for Meta. Okay, let's take a look at Beam and Marvell. So Beam Therapeutics, looks like we've done some analysis. A $3 billion business, doesn't seem to have a lot of revenues or profitability. Negative net debt on the balance sheet, so that's good. However, we've got a very strong support on Beam here at $25 to $26, and another support, probably this previous resistance acting as a support at $29 to $30. And then when it comes to Marvell, we're seeing a lot of consolidation, and support level is going to stay put at $78, $79, with a resistance all the way up to as much as $97 to $98 for Marvell. Okay, UiPath and JPM SCHW, which is, I believe, going to be Charles Schwab. So JP Morgan is part of the shopping list. I think Charles Schwab is also a phenomenal business in the brokerage space. So there's two finance, I guess there's three. So there's three finance and fintech companies that are part of the shopping list. There's Interactive Brokers, phenomenal business, very strong margins, consistent growth, wide global coverage for brokerage services. JP Morgan, one of the largest banks in the world and in the US, handling most accounts and most different kind of business subsets. And then of course we got SoFi, which is the one and only digital bank, really just kind of reshaping how banking is done, right? And has very low operating expense, less overhead, and massive potential for margin expansion as well as growth for market cap. Charles Schwab, sits in the financial space. It's part of XLF. I would say it's a very strong uptrend, higher highs, higher lows, but a lot of them obviously end up being dividend plays as well. Charles Schwab has got a dividend about just about 1%. I use it. It's not the best in terms of functionality, but it gets the job done. So higher highs, higher lows, and support level is going to stay put at $98 to $99 for Charles Schwab. No shot that it'll bounce back. I'm just going to charge my computer. Check 1 2. Can you guys hear me? That's so weird. How did that happen? Hello. Check 1 2 3 4. Can you guys hear me? 1 million, 2 million. That's what Warren Buffett did at one of the college conferences. Super funny. But okay, perfect. Now it's working. I don't know what happened. It just automatically hit. You know what? When my microphone starts dying, that's not a good sign. That's definitely not a good sign. That's what happened 2021. My microphone died, and then I had to get a new one, and I got a red mic. And then we know what happened in 2022. Absolutely brutal. And then my 2022, at the end, that red microphone gave up. It was having technical issues. It just essentially died at the end. And then we started this 3-year bull market. All right, 3 years of absolute gains. And now this thing is giving me some issues, some trouble. So it's not a good good sign. So you never know. If this microphone gives up on me, there might be a red mic that's long overdue. But I was also watching a very interesting video earlier today, and I'm kind of building on that study. There's a lot of different cycles that are coming together. There is a real estate cycle, there is the Benner cycle, and there's a few other really important cycles that are all coming together, converging, suggesting that 2026 and 2027 might be one of those times to be absolutely cash ready, because it is, and again, these are all predictions, right? Because nobody can get it right. Nobody knows when that next correction or that next pullback and opportunity is going to come in. But it's always important to be ready with those. Do you think this is another taco dip buying opportunity or start of a serious correction? I think it's just another taco dip buying opportunity because I doubt that Trump is going to go that far with these tariffs over a deal over Greenland. I think this is another one of those fears the market has created. I mean, because there's nothing wrong. Everything's solid as far as I can see. Like earnings are reporting, companies are reporting great earnings. Inflation, at least a reported inflation, real inflation, we can kind of disregard because nobody can really know what that real inflation is. But at least a reported inflation is coming in lower. Unemployment, again, reported unemployment is coming in at reasonable levels. I think that Trump-Powell feud will continue over the next couple of months. Not that Trump can do much about Jerome Powell. His term ends in May, and then we've got another couple candidates running for the chairman of the Fed. And there's another 3 meetings left before Jay Powell calls it. And I think we're going to be seeing another rate cut under his watch. The next meeting is going to be a rate pause. And any kind of pullbacks and dips and corrections we see, if volatility gets up higher, I think is in my book a good buying opportunity. I think there's going to be deals, discounts that we can just take advantage of and repeat the playbook. There's not much to it. We don't really need to overcomplicate things as long as... So I don't think Jerome Powell is going to cut rates again, ever. The next meeting is in June for where the rate cuts are priced in, and by then he's going to most likely be gone. So 3 more meetings under Jay Powell, and all 3 of them are priced in for a pause. Audio gone. Can you guys hear me or no? Is my audio coming through? Kirta says audio's gone. Silvana says, are you on mute? I'm not on mute. Okay, perfect. Might just be a YouTube thing also. If you want to reload, refresh the page, it should work. Okay, perfect. Yeah, so like I said, I think it's going to be a buying opportunity. If markets drop further, whatever kind of deals we can get, that I think is time to deploy capital again. And February and March, last 6 years, we've seen markets go down, during those times. If you come over to SPY seasonality, let's see if it actually has that on here. But take a look at this. February, which is quite interesting, 2025 down 1.4. 2024 was up, but then it was April 2024 where we were down over 4%. But then 2023 February, 2022 February, 2020 February, 2021 was up, but we had a worse January. So if you consider the first 3 months of the year, January, February, and March, over the last 6 years, 2020, 21, 22, then 23, 24, 25. So last 6 years, the first 3 months, we've seen a red month by more than 2%, 3%. So are we going to see 3 months in a row of green in 2026? It's possible, but I would put the probability down to less than 10%. So deals are indeed incoming. We just have to be ready for it. And that's when volatility comes in. And so we'll see where the MoneyVest Index also opens in once the market opens. Okay, questions. If the audio is good, let's take some questions again. Can you look at Hood, please? Bullish pen and pattern. Am I mistaken? So let's take a look at Robinhood. Robinhood's been on my watch list for a long time. And yes, I would mention this as a symmetrical triangle as well, as it continues to trade inside this pattern here as it's coiling in. But we do have a lack of sort of higher lows. Only a couple times it's bounced off of those levels, and it might just be coiling in perfectly in times for earnings, right? So earnings are going to be, if you see that dotted line or dashed line, the purple line, it's just right at that coil, just that wedge that's kind of filling in. And so if you do see those earnings coming in strong, a breakout is possible, and then a breakout over 125, 126 is where Robinhood has the potential to get up to 150s again, because that's a resistance. And then of course support level all the way down to sub 100. Actually, you know what? It's down 4%. Today might be the day. I actually sell a Robinhood put. Finally, after a long time, I might look into selling a Robinhood put here on the day. So $95 is a strike that I'm considering. What kind of premiums can we get for $95 put for next Friday or this Friday? Another 7 to 8% away. Let's see. 109, 7 to 8% was going to be $100. Let's see what $100 was selling for last week. So $100 puts, we're going for $1.20. That's not bad. That's good. 1.2% with a delta of about 29, so just under 30. So that was 7% away from where the market price was. And so it was $1.20. So now since the price is going to be 104, 95 is going to be close to 7 to 8% away. So I'll see what those put premiums are trading at. But if I can get 1 to 2% for next Friday, I would love that in 10 days. So that is one that I'm looking at now. Iron we covered earlier. So Rico, we covered iron earlier. So definitely go back and check out the iron analysis. View on Meta also we covered earlier. Meta I think is coming down to some great value for money. We'll take a look at NVIDIA here in just a minute. Want to hear your thoughts on, I have a couple of $990 covered calls on Tesla that are up 60%. Should I close them and reopen new ones that are lower in strikes? So, you know, the general rule of thumb, what's the expiration? You didn't mention the expiration here. Is it the end of the year? Expiring at the end of the year. Okay. So if it's at the end of this year, if it's December, I would most certainly close them. You know, because the reason why it's so important is because if there is right now between between now and December, how many months are left? There's 11 months. If you do it in number of days, right? So 20 days divided by 365. So we have already completed 5.4% of the year, right? 5.4%. So there's 95% of the year still left, and you've already captured 60% of the premium, right? So it absolutely makes sense why you would want to buy to close them and open new ones. Now, whether you do that at a lower strike price, that is completely up to you. But if there is significant amount of time left in the contract and you're up more than how much the time left there is, I think it makes sense mathematically to close those options. The time when it doesn't make sense is because if there's less time left and you are also up less than how much the time left there is, because then it makes sense to capture the entire premium. Might as well just wait whatever the time left there is. But if there's over 90% of the year left and you're already up over 60% on those covered calls, take the profit. That's incredible. In such a short span of time, you're up a lot. You can rinse and repeat and sell new calls. Okay, let's take a look at NVIDIA. NVIDIA is also pulling back down to 181, 182 right now, so down about 2.5%. Support level is going to stay put down to 170, 171. And a resistance right now back at 184 to 185. So this is the resistance for NVIDIA. Support level is going to stay put at 170, 171. NVIDIA, like I said, is one of my long-term positions. Will continue to hold these shares that I have. And my 187 call expired out of the money, or I actually closed it out of the money. And then I also have 170 call, which I'm still working on September expiration. So that's the only covered call that I have. If it expires out of the money, man, that would be a blessing from the markets, from the market gods, if NVIDIA closes below 170 by September. Even if it doesn't, then I have the option to just roll that out if I want to. Okay, I'm going to cover as many stocks as possible. So let's take a look at DUOL. Again, these are going to be quick technicals, not diving too deep into the fundamentals because that can take too long. But support level 143 for DUOL. It's been selling off aggressively after the breakdown from this uptrend. Had a little bit of an inverse head and shoulders. Looks like we've done some analysis on this, but this was a left shoulder, head, and then a right shoulder, and then a breakdown, pretty severe breakdown, and then it continues to sell off further. Watch that support at 143. If that breaks, then we're looking at 119, 120 as the next support for DUOL. NVO. Heard some great things about NVO coming in, starting to really move higher. But once again, battling through that resistance at $61, $62. So this is what we had discussed in our previous live stream and analysis, where exactly getting rejected there. Once again, at $61 to $62 and starting to roll back down. Support level is going to stay put at 50s, $51, $52. And the good thing is that we're already starting to see some signs of a potential reversal. So this is the lower high and lower low pattern. And we're starting to see that shift in the overall pattern with higher highs and higher lows. Let's take a look at path, UI path here. A lot of consolidation getting rejected here at 1865. Support level is going to stay put at 1340. And once again, a lot of range bound pattern here. This has been the range within which path has been trading since May 2024. So it's been almost 2 years. It is in that range right now. Support level next is going to be closer to 1340. Visa we covered in one of our videos. Microsoft also we talked about it earlier. Let's take a look at ARM Holdings, so ARM. Done some research analysis on ARM as well. It's on the channel. If you just type MoneyVest ARM research, ARM stock analysis, you'll find it. But this is the range bound for ARM. It's a swing trader's paradise, options trader's paradise, as it has been trading sideways for a really long time. Support level is going to be $86. So this is the level to watch. And that's where it has bounced off of many times before. Resistance struggling around 177, 188. And then resistance all the way up to as much as 125 now. Oracle, we'll take a look at. Meta, we covered earlier. Lots of Meta requests. Let's take a look at Palo Alto. We have also talked about in the past. A lot of consolidation, but more or less nice higher high and higher low pattern here. So it is still making progress, unlike some of the other ones. And it's actually trading down to some pretty attractive levels, but I would still be looking at 165 and then potentially down to as much as 140 for Palo Alto. I think that would be much better, much stronger areas of support and a better deal, to be honest, for Palo Alto. It's part of the shopping list, and then resistance all the way back up to all-time highs at 223, 224. Okay, Robinhood Dave, we covered earlier. You missed it. I'm looking at selling puts for Robinhood at $95. So we did cover that, I think maybe 10 minutes ago. So feel free to kind of go back on that and then come back to the live stream because we need you for the live. Let's take a look at Spotify and Visa. Visa we covered earlier. We talked about the Credit Card Competition Act and how I think it is. Again, these are just my predictions, even though I don't like to make one, but I don't think it's going to get passed in Congress, that bill. It's been knocked down before already back in 2022. So I think that was a bit of an overreaction for Visa. But then we did some analysis and the fair value is still a little bit lower. So let the price come to you, let the discounts and deals come to us, and I'd be more than happy to pick up Visa at some of these attractive levels. Spotify, 443, 444 is the support. Next, it has been on a very strong uptrend up until June, and that's when the sell-off actually began. Very, very oversold now. So coming down to some pretty oversold levels here. So 444 is going to be that level. And Visa also continues to slide further. And I think we talked about $300 as the area of accumulation and dollar cost averaging level here. So that was the support level that I'm watching for Visa at $300. Okay, so looks like I'll be closing my covered calls in days to come. My portfolio is down 4% pre-market. I know my options portfolio is taking a hit pre-market as well. So NVO we covered, ARM we covered, Robinhood we covered, Meta we covered, Palantir also we covered. But let me just go over that again. We got Palantir trading sideways. I mean, for the most part, down another 2%, 167. And I do want to accumulate more Palantir in the options portfolio. So I want to pick up another 90 shares. I've got 10 right now in the options portfolio. So we'll pick up 90, get it up to 100, and then start doing the same thing I'm doing with Meta, which is sell covered calls and run the wheel. And support for Palantir is going to be 147. So this is really the level that I want to pick up Palantir at. Now, the idea could also be for me to sell those 10 shares and then sell a new CSP just to start fresh. Or just wait for the price to get down to those support levels and then pick up some shares around those levels. So those are the couple things that I'm really contemplating for Palantir right now. Okay, so guys, I'm going over as many stocks as possible. I'm only asking for you to drop a like if you can. I would really appreciate that. And also subscribe to the channel if you haven't already. I would appreciate that as well. And last but not least, share these videos and live streams with as many people as possible. Our goal this year is to get up to 200,000 subscribers. We want to double in our growth, and we're going to get there by creating a lot of value, by helping each other, and creating a community where everyone can grow together. That's the motto, that's the philosophy, the culture for MoneyVest is always will be helping each other. So I would appreciate that. All right, couple more stocks, and then, like I said, I've got to run. I've got an important meeting, but let's take a look at Fortinet. And Fortinet also coming down. It's part of the shopping list. I think it is one of the best, highest quality cybersecurity companies. I do still owe you guys a cybersecurity video where we will be comparing Fortinet, Palo Alto, Zscaler, CrowdStrike, all these companies, as well as diving deep into the CIBR, which is the cybersecurity ETF. Because I do think next to semiconductors, I do believe cybersecurity is going to be huge in the years to come. Semiconductors is the most bullish sector for me personally, along with electric vehicles and automation and robotics, but then also cybersecurity is up there with these sectors. I think these are the technologies and the sectors you want to be a part of over the next decade as we, move further into digitization of everything, artificial intelligence, data centers, everything. Cybersecurity is going to be increasingly important. So support level for Fortinet is going to be around $72, $73. And the lower it gets down to, the better the deal becomes. And it was consolidating sideways for a long time before finally breaking out to new all-time highs. And then since, it's been very, very volatile. Okay. Do you think this could be a shift in market trend and sentiment? Market will correct from now on. I think it is possible for the markets to continue to be a bit more uncertain in 2026, because if there's one thing that we know with the current administration with Trump is that he's always going to keep investors on their toes. There's always going to be something new, something out of the box coming out. Whether that's good or bad is, of course, for investors and for people and for policymakers to decide. But the bottom line is all of this creates a lot of uncertainty, and when there's uncertainty, there's opportunity. I don't put uncertainty in the same bucket as corrections and crashes and stocks going down, but uncertainty is just another word of opportunity for me, because when there's uncertainty, there are going to be discounts and deals, because a lot of investors do tend to overreact to situations, right? As Tom Lee once mentioned, and I fully agree with him on this, is investors, institutional investors and hedge funds, they fire first, aim later. That's what they do. They want to get out of the market and then think after, because they are always in the mission to protect capital. They always want to preserve capital because their goal is short-sighted goal of beating the S&P 500. So that's where retail comes in. That's where we have the maximum opportunity, because we're not on a clock. We're not in the board meetings. We're not, reporting to anyone about our gains and what we're doing in the market. So as a result, we have a lot of leverage over institutions where we can be patient, be more disciplined, and have the time do its thing in the market. And we don't have to overreact. We don't have to panic sell and get out of our positions just because they're doing it. So that's where I think when there is overreaction, that's where the opportunity comes in. And overreaction often comes in with uncertainty. So, we got to stick to the playbook, trust the process. When the VIX is high, it's time to buy. When the MoneyVest index is low, it's time to deploy. And as a result, we will be just fine, in my view. And yeah, Mike says, if you haven't already, come join the community. It's an amazing platform with access to lots of smart investors. Really, it is. I mean, your net worth is your network. And the more you surround yourself with people, with like-minded individuals, people who are there to help you, grow with you, and the more you'll see the results. So definitely give it a try. We're more than happy to help. Email me at admin@moneyvest.com, and I'm more than happy to get you started on this journey. So thank you so much, everyone, for joining us on this live. I did start early today because I wanted to end a little bit early. 5 minutes until the markets open here. Pre-market not looking super great, but we're always prepared for these kind of days in our community. That's why a lot of times I will always mention being cash ready, being prepared, because this is really what it comes down to. People who are not prepared are going to be forced out of their positions. People who are prepared are going to be the ones taking advantage of those deals and discounts. So thank you so much. Happy investing. Have a great start to your week, and I'll see you all in the next